All right, traders. This is Blake Morrow. You were listening to the Morning Edge webinar, and I was just looking at crude. Obviously, I just tweeted out the charts. If you guys are following me via Twitter, we are, obviously, I don't have to, tell you how important of support we are at on crude. We've had this flag pattern here. We had this flag pattern drawn for. Well, you guys have been listening for the last couple months. We've been looking at it. I mean, it's just, everybody's like, oh, we're bottoming in crude. And I'm like, well, I don't know. The flag that we've had on the weekly chart's been pointing to 42 bucks forever. For the last, it's been pointing there for the last few weeks. So we're there, and this just shows you how important the support is. And obviously, I'm very interested in where crude's going right now. Wow, the euro's hitting new lows. It's good. I'm short the euro, so this is good. But I'm wondering, as I blogged about the other days, are we going to break it? If we break 42 bucks, everybody, and you guys can chime in if you want. I know a couple of you did yesterday. Everybody that has a broker that can show you longs versus shorts, retail in crude, the numbers are fairly staggering for retail traders. I mean, anywhere from 5 to 1 to 10 to 1 longs versus shorts. So you guys feel free if you want to chime in. That means everybody's buying down here, basically. Anybody who's retail, they're buying down here. Scary when that happens. It's like you're just kind of waiting for that boat to tip over. When everybody's buying down here, it's like everybody who's retail, and retail's typically wrong. So something we'll keep a very, very close eye on, especially as the hourly charts are getting a little scary here. All right, let's go into the majors, as we do every day at this time. So if you guys are newer to the Morning Edge, so this time of the day is when we go through all the majors. You get a drink of coffee. Let's go ahead and get going. Here's the euro. By the way, I had some comments I should read really quick. Like Amanda says, long-term, medium, long-term dollar bulls have taken a bash too. Yeah, I think so. I mean, we're in a consolidation. I mean, you look at the dollar index and it's consolidation. That's why typically I get really nervous when we're at the upper end of our triangle, and that's why I kind of want to punch myself in the face for not taking my dollar Swiss off the table at 99 cents. It's just like that's one of my biggest trade gaffes that I've had in a long time, is not taking profits when we were up there. And it's so frustrating. It was so frustrating to me. It still is, obviously I keep talking about it, so I should just get over it. But that to me was a mistake, because we were at the upper end of our flag on the dollar index. I mean, if you look at the dollar index right here, as you guys know, this is a very bullish pattern on a weekly and monthly basis. This is a very bullish pattern. It's just being bullish up here is a no-no, and of course I was. And it's like, but typically I'll buy on dips, and that's how you have to play it. Is if you're a dollar bull, you want to be buying on dips. Obviously, if you're a bear, you need to be selling up at these levels. I just think it's a tougher trade to try to fade this move than being a buyer. But yes, I agree with you. Malcolm, you had a question about the pound, which we're going to go into here in just a second. And I can't read everybody's comments, but there was one other that I wanted to read. Excuse me, Patrick. And Patrick, I've met in person. Patrick G. He was in Dallas with us last September. I think it was September or October. I can't remember exactly when it was, but we all flew into Dallas. There's like 40 of us. We met, traded together, did some training. Patrick flew in from the East Coast, and he said, trading around a losing position is where the rubber hits the road, and you have helped me with this enormously. Think ahead, don't panic when it heads south. And I appreciate those comments, Patrick, because you're right. That's where the rubber meets the road. And one of the things I always learned, whenever you're in the markets and things are going against you, not to panic. Panicking is just the same as chasing. Now, obviously, there are situations that, you know, a panic is like, it's like that is a you should panic, but it's very rare. Like panicking in the markets, you should, because there's usually not, everything is just kind of exaggerated, but panicking is usually not something you want to do. It's just like chasing the market. Okay. All right. So anyway, thanks for those comments. I appreciate that. So here's the euro dollar, and where Paul got the 110.70 as key support is the 38% retracement. I mean, if you look at the 38% retracement and you look at some of these spike highs, it's going to take us around this 110.80, 110.70. And I would say that with the euro dollar, we should have really key support here. Now, the problem that I see with the euro at this moment is that we're challenging support. So if we break through this trend line support in the euro at 111, I don't know if this 38% retracement is going to hold, because this is such a fresh break. You get what I'm saying? This trend line break, if we take it out, do we just stop here? I'm starting to think that it's going to be a little bit deeper of a correction. Like if this breaks here, we're going to correct more to like the 618 towards a previous resistance. Okay, like that. Now, obviously that's looking a little far ahead at this moment, so I'm going to remove that. But what I am thinking is that this 38% retracement should offer us support today. Think about the bodies here, not the spike, the body, but the spikes, I mean, could hold too. That's just a quick dip below one, 11. But 110.70 should offer some support, 75. So I'm just going to, and it's an approximation anyway, it's just a zone. 110.75 should offer some support today. Now, like I said, I'm short the euro yesterday from 112.02, and so, some of me just wants to get short the euro, stay short it, and just move. Well, my stops are at break even right now, but I just kind of hold it through whatever volatility we have. But the data that we get today, especially when you're talking about retail sales, there's a pretty high benchmark today for retail sales. We are expecting a pretty aggressive bounce back. The market or analysts are expecting 0.4% on core, 0.6% on retail sales. I personally think that's kind of a high benchmark for retail sales today. So there's a good chance that we can bounce right back to like 111.50 in the event that we have a weak number. I don't think that is out of the question. So I'm hoping that doesn't happen, but it's entirely possible. 111.50 should be resistance on the way back up. We are still in a big, fat, hairy range. Okay, speaking of big, fat, hairy range, this is also a big, fat, hairy possible double top too that you have to pay attention to. Mark Chandler of Brown Brothers, he this morning he made note of that. But yesterday, just so you guys all know, we were looking at this level as very important. That's why I tweeted it out yesterday. As a confluence. It's a confluence of a 618, 127% extension, 127% extension of that, 618 of that, horizontal resistance of that. That's why I shorted it. Okay, but yes, it also is, creating possible double top. But in order for it to be a double top, you got to break through support. So it's really not a double top right now, but it is what I would consider critical resistance on the way back up, if we head back up there over the course of the next couple of days. Okay, but for today, 111.50, 110.75, and that's what we're dealing with right now. All right, let's go ahead and take a look at the cable. So Malcolm had a question about the pound. He goes, Blake, I followed you short with the pound. It's been very frustrating. We went from being in a wedge, descending wedge. Well, I don't know if I maybe there was a descending wedge. Oh, it was a descending wedge that looked like, or maybe it was a wedge that looked like. Shoot, I don't know which wedge we were looking at. But he goes, but it's now we're back into the range. What am I going? What are we? What are you going to do? What am I going to do? What should we do? And for me, I mean, I'm frustratingly short the cable. It's so frustrating. It's like I feel like I want to throw my computer out the window because this is such an annoying move. But let's talk about what we're doing here. Okay, so first and foremost, and let me get rid of this blue line, and let's put this red line up here just to make it a little bit more simple to look at. So as you can see, this resistance has really managed to keep us in check for, God, it's been a month, right? If you go from high to low, that was a 618, right up here at 157. And you can see the cable's just near its highs. I mean, the cable looks like it's going to hit highs of the day. I personally think we're going to spike right up to 156.70 here in just a few moments, actually. I'm just letting you know. I think the cable's going to spike right in new highs right now. Okay. Um, do I think the cable's going to spike right back into the 70s? Yes. Do I think the pound has the ability to break above 157? You know, if the data in the US is weak, if consumer retail sales data is exceptionally weak, it has a possibility. I mean, there's a possibility. The 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 problem with the cable that it has from a fundamental standpoint is last Thursday didn't do the bulls any service. It has held up pretty well over the course of the last couple of sessions because, well, the euro was rallying, so the pound was naturally rallying, and today the pound is not selling off because the euro crosses are getting hit, like the euro Aussie, euro New Zealand, euro pound. All right, so the pound is just kind of stuck in this, uh, you know, um, the stops have, or the the pound's just kind of stuck in this, in the crossfire, if you will, and you can see how choppy it is. Personally, I'm going to look at any dip now back down towards this yellow line as an opportunity to get out of my shorts because I don't want to be stuck in this mayhem, because it is. I mean, it's just, this is mayhem right here. Between this red line and this yellow line, we're just kind of stuck. So do we have, is it frustrating? Yes. Is it, do I wish I wasn't, do I wish I wasn't in the, do I wish I was not in the trade? Yes. Um, do I want to get out right now? I'd like to make the market force me and tell me I'm wrong versus me just making an assumption I'm wrong when I'm up against resistance. You know what I mean? So it's a tough call for me, but if it gets above 157, I have to cover, because if it's not going to go down, it's probably going to go up. Okay. Flip side is while it's trading below 157, I think the opportunity for it to drop back down towards 154.50 is pretty good. So it's just frustrating. Any which way you slice it, very frustrating. So I'm going to put in resistance today at 150, well, 157. I mean, we can write down 156.80, but it's really 157, which is the 618 up there. And support, I mean, support right now is 156. I mean, if we break 156, it's going to expose a move back down. So, but for right now, today, 156 is support. Very frustrating, tight range in the cable. Like I said, I personally would like to throw my computer out the window because I happen to be trading the cable. You know, the cable tends to do this to me too because I don't trade the pound a lot. I really don't. It's not a currency that I really favor to trade because of its frustrating false break nature. You know, false break to the upside, false break to the downside, whipping around all the time. You know, directionless half the time. I tend not to trade the cable all that much, and it's times like this that I trade it that remind me why I shouldn't trade it and why I don't trade it that often. So, all right, let's go to the Swissy. So, hey, the Swissy did something pretty cool yesterday, which I'm happy. Thank God, I'm happy about. So let's take a look at the Swiss franc. So the Swiss franc, and I'm gonna keep everything. I'm gonna keep some of the longer term stuff here, and let's do this. Okay. First and foremost, you guys know that obviously, and I'm gonna remove that, remove that, remove this. Okay. I'm going to remove that. I'm going to leave that there. I'm going to leave that there. No. I'm going to remove that. Okay. So you can see why 99 cents is such a big deal. Such a big deal. And again, my biggest trading gaffe in recently was not taking profits there. But Daryl yesterday brought up a really great chart, and I have to say it held like a champ. And I will also say that I did not believe we would actually challenge that support yesterday, but we did. Okay, so this channel is very important to me now. Okay, very important. Looks something like that, give or take. You see it? Very significant. And also I want to show you also something else. Let's do this. 618. See it? Bam. Do you want to see something else? Not that. Sorry, that wasn't what I wanted to see. Uh, yeah, it was just the 618. I'm sorry, I was thinking about that from yesterday, but we overshot it because I was looking at it. I'm like, oh man, because we actually stalled at the 618. I'm like, oh, that should hold it. We stalled at the 618. 161% extension, excuse me, yesterday, and then we we went right through it. We stopped, and I'm like, thank God, and then we went, and I'm like, holy crap. Anyway, but the 618 held, channel support held. What that means now is this: we are getting a very, very tight range between the Swissy, between here and here. So what that means to me is there and there, vitally important now. You break through this yesterday's lows, the Swissy is going to absolutely get crushed. If we break through those highs, it's going to be a home run for me. But I will tell you that this now is the do or die for the Swissy. Okay, it's what's going to determine, does this bullish trend continue, or does does it shift from being bullish, which it still is, to going back into the range? Okay, so that's how big that is. Now I do think, let me point something else out. Intraday for the Swissy, we are approaching a 618 retracement that comes in at 98, basically 98.10. Okay, but you can also see today a previous support is going to act as current resistance. That comes in at 98 cents. So resistance 0.9800, 0.9815. Those are two levels of resistance we need to pay pretty close attention to. All right. Okay. Support. Obviously, support's going to be way down here, but I don't know if that's necessarily support that we're going to be dealing with today. You could probably get some support at 97.50 on a dip, for those of you looking to be on the long side. But I will say that in the event, okay, in the event you get a dip down to here today, down to like 97, you have to use that as an opportunity to be on the long side. That's when the Greek gods start singing, and I'm not going to sing the Greek gods because I just don't have enough time this morning. But if we get down to 97 cents for some reason today, a real weak retail sales number, that is the place where, if you can buy the Swissy, that's the place where you want to be long, in my opinion. Okay? Okay, great. Let's go into the dollar yen. So the dollar yen, it has given us a false break to the upside and a false break now to the downside. And yesterday when we did the false break below 124, I said, oh crap, this thing's going to give us a false break to the downside, just as it gave us a false break to the upside. So we got a false break to the upside. We slipped to new lows. We got a false break to the downside. I don't know if that's going to push us to new highs, but that obviously pushes back into the middle of the range. How frustrating is that? That, my friends, is frustrating. Okay, so now 125.30, 124.75. What we've done is we've expanded this range a little wider now. Look at crude oil. Eesh, crude does not look good. Okay. Anyway, 123 and 3/4, 125 and 1/4, and we are in a range, and 123.75. I know this is really wide, but I don't know what else to do with it. I really don't. I don't know what to do. Range. All I can tell you is I don't think I want anything to do with the dollar yen right now. Not at this moment. Okay. Canadian. So I bought some Canadian yesterday. Why did I buy the Canadian yesterday? Because I wanted to buy it as I think crude oil is looking weak. Are you guys watching crude, by the way? Um, we're about ready to drop below $43. Getting close to that trend line support. All right, so I'm bearish crude. I don't trade crude, but I'm bearish crude. I blogged about it, as many of you had read. Um, so but I want to take advantage of it. The way I'm going to do that is buying the dollar Canadian when it's cheap. So buying the dollar Canadian down here below 130 was an opportunity yesterday for me to get long. I'm not up huge. My cost average is 129.90. Okay, so I'm not up a lot of money in the dollar Canadian, and it's not a huge position because I don't want to establish a big position until, or if, not until, but more if crude oil breaks below $42, I want to have some dollar Canadian long exposure, plain and simple. I will add to my dollar Canadian long if crude oil actually does break down, but I do not, or I do want to have some exposure. Now, as far as the dollar Canadian goes, 127% extension of the last range that we had actually takes us to 129.25 or 129.45, which was 129.50. I do think that that's going to be support. So even if we do hit new lows, that still should offer support. Okay, it should. Now, question is, are we going to get all the way down there? All right. It looks like we're trying to round this bottom here. So let's see if we can, we can, you know, drag a little higher here. I think we can quite possibly. Hold on, really quick. Um, this seems to be like what's in play right now, right? Something like this. I'm being very vague here, so at the upper trend line, but a move back up towards resistance obviously wouldn't be out of the question if crude oil started to break down. So today resistance, that spike high all comes in at 130 and a quarter. So that looks fairly significant. 130.25, and we are. It's a tough call. I mean, I want to say that we're still bullish because, I mean, this is, yes, we're struggling a little bit here this week, but overall, that's a pretty damn bullish chart, right? I mean, it is. I mean, it just is. Um, all right. So anyway, let's look at resistance of being 130 and a quarter, support being 129, just 129.50 in general. Okay. When I come back, we're going to do the Kiwi, Aussie, dollar index, take a look at some of the other like Nordic currencies, see if we need to put them on there. Don't go anywhere. I'll be back in a few moments. Thanks everybody for being here this morning. All right, traders, this is Blake Morrow. You were listening to the Morning Edge webinar. I want to welcome you all back. So let's go ahead and go into the Kiwi, Aussie, and dollar index, and we'll go from there. Okay, so here's the Kiwi. So the Kiwi, now for obvious reasons, is starting to really form another tight range, and it's something we need to pay a lot of attention to as this range starts to get increasingly tight as we move forward. The 618 retracement obviously is holding us right now, and that comes in. Let's just write 6650 roughly. Okay, here's your, this is an hourly chart. You can see what's happening. Okay, 6650 is resistance. Support is now at 65, and we made a false breakdown yesterday, which allowed for us to rally and make a false breakout yesterday, and to the upside. So now we're about back to mid-range, but we're in very important range, and we're consolidating in a bearish wedge type of environment, which to me looks like the likelihood of a downside break is increasing the longer we stay in this formation. And matter of fact, yesterday posted a really nice hammer, but we've yet to see any type of follow through. Okay, so anyway, 6650 to 65. They're all areas, not necessarily the actual level. But we're still in a bearish wedge. All right, cable looks like it's going to hit new highs, as frustrating as it is. And let's go over to the Aussie. Here's the Aussie dollar. And the Aussie also, very frustrating here too. We hit new lows, but we hit the 127% extension. If you don't know why that's such an important level, let's review. Okay. If you go to the yeah, I have to go to the weekly chart. This is how big of a level it is. You go from the lows of 2010, I think it is, right? 2010 to the highs of 2011, 127% extension comes in at 72.41. We hit 72.16, but really the 72 30s created some strong buying, and like the kiwi, it's kind of moderated that buying, and we're still making lower lows, you know, or lower highs, lower lows. As frustrating as it is, it still is what it is. So 74 cents and 72.50 really is what it all boils down to right now. Same thing as the kiwi. Just these areas are very important. But we're still on a bearish trend. Threatening to turn back into a range environment, but we're really just more of a bearish trend. Let's go over to the dollar index. So here's the dollar index. Let's go to the daily chart. Okay. So one thing that was really unique about yesterday, let's delete this fib level really quick. So yesterday, we had the threat of posting a double top here, as we talked about yesterday morning. Okay. We didn't close below. See how we rallied back and closed back above the breakdown point? So just like a lot of these other currencies, you had a false breakdown or false breakout to the upside, false breakdown to the downside, and here we are, trying to rally back. So for right now, really key support is going to be here at 95.55. Let's double check and see if that is a fib level. It is. 50% retracement comes in at 95.90. So 95.90. Resistance. Probably any move back up towards, not because of the fib, but more of the previous support there. Any move back up to 97, 97.10, it's probably going to offer us some pretty good resistance on any bounce for today. Yeah. All right. And we are still in a range. Okay. Now let's go into the peso, Swedish krona, Norwegian krona. Here's the peso. Let's see what happened to it. I didn't even look at it yesterday. And look at that. Wow. Looky here for the peso. Like I said, I haven't been looking at it. I don't trade it, and yesterday I was focused on everything else that was happening, so I wasn't really paying attention to it. But yeah, I mean, real key support coming through here for those of you that trade the peso. I really am not too sure how to look at this upside trend line. Maybe it's like this. I don't know. That would, I mean, something like that. I don't know. But I will tell you that it's, grinding higher. It's dollar peso. I think there's a whole lot to do with it. Here's the Norwegian krona. No, just like every currency, it's like everything we've looked at. False breakout to the upside, false breakout to the downside. This Norwegian krona, For those of you guys that can trade it, this is definitely one you have to keep on the radar, especially if crude oil breaks down. Now, crude's holding today, and I don't know if today is the day that it breaks. I don't know if it never breaks. I don't know if it starts to bounce today. I don't know. But if crude breaks lower and you can trade the Norwegian krona, you have to look to be long the US dollar Norwegian krona. If if um, if crude oil breaks down below $42 a barrel, okay, if that happens, you should have your attention two places: US dollar Canadian, US dollar Norwegian krona. Okay? And the ruble, for those of you guys that trade the ruble, because a break below $40 probably would bankrupt Russia. I'm kind of joking, but anyway. Swedish krona. There was some inflation data that came in much hotter than expected overnight, and that pushed the US dollar Swedish krona lower. Now, the US dollar Swedish krona, this is important. I have been monitoring this, or not I, we had been monitoring this bull flag pattern. It looks like this. Weekly bull flag pattern, right? But look at the weekly chart right now. Look how it's rolling over. It's rolling over pretty aggressively. And then again, they had some inflation data that came in pretty strong. Let's figure out where support is here, because if the dollar weakens today, I mean, the US dollar Swedish krona is setting up possibly a big double top, possibly. It looks like it's still going to come in some. So if the dollar weakens, I mean, this US dollar Swedish krona looks like it could probably come down to the maybe 830, maybe lower, somewhere down here. This looks possible. There's no significant support or resistance really nearby. I would think if you get a rally back, it's probably a nice short, but I don't. There's like no. I'm looking at the chart saying I don't see any like significant, like I would be a seller here for sure, if it were me. But there doesn't look like there's like any technical reason for a certain level to be played. But here's the thing: if the dollar weakens after the retail sales numbers, this is probably a good short. So just I'm thinking out loud for those of you that can trade it. All right, here's your bias chart. So I'm going to go ahead and let you copy that, and let me take some questions. So let's go over to